Yes, welcome everybody. We'll start in roughly 3 minutes. I'll put it. Yes, so we can start. So schedule today, we are just going to look at basically headlines for the market, the economic calendar. That's going to be really quick because there's not that a lot of major news today. There is some. And then we're going to look at breakout patterns. Then we're going to scan the market, and then we have the Q&A, and it will last roughly 1 hour. So the market has opened, the US session has opened. Usually I make my trades when the US session has opened. However, the market is still in its downward move, you can basically say like that. And when that is the case, I usually just sit back and wait and see what basically where it is going to land. It does not look very pretty at this current stage. Main reason is because the US dollar is appreciating. US yields are still rising. We can see down here is up 1.83 at this current stage. NASDAQ is down, S&P is up, gold is down, and WTI oil, which I should have held that trade a few days ago, is up 3.25%. That doesn't really make any sense, and I'll get into that in a moment. So overall, the world economy is not doing very well. As you heard, Powell basically said yesterday that it's going to take quite a long time until they get back to full unemployment and so on. And therefore, most of these commodities, usually in a time like this, they are supposed to be going down. For example, oil, usually I should expect it to be trading at roughly, $25, $28 a barrel. It is trading at 65. So some things are completely out of line and will basically work against the world economy going back because we need oil in order to produce things and so on. So if that is very expensive, then it will basically technically work as a tax against the recovery of the world economy. But the major news today is that if we go to the economic calendar and scroll down, and we can basically see that non-farm payrolls, they basically increased significantly. So there was a major jump. 379,000 people received a job in the non-farming sector. Unemployment rate, it dropped by only 0.1%, and both of these are encouraging signs for the US economy. It's not a major drop in the unemployment rate, but still it is a drop, and the market will see it as a positive sign getting out of this crisis that we have basically been in now for 1 year. And this is certainly a very encouraging sign. However, the stock market is not saying the same thing. So if we go to look at the market overall, you can basically see that especially companies like Tesla, the big growth companies, those are the companies that are basically dropping like rocks at this current stage. So Tesla has increased by roughly 400% last year, 400%. Neon has also increased by hundreds and hundreds of percent, and their earnings to price ratio are just absolutely out of this world. And most of those companies, we're basically seeing that they are falling. So it's looking a little bit better now. S&P is up 0.5%, give or take, but we're still trading underneath the 50 moving average. We are getting into a territory in the MACD where it's negative. So if I just take overall for people that just have joined the Patreon channel and haven't seen this before, this is basically my setup, what I basically use when I do my trading. So up here in the corner, we have the Bollinger Band. And if you want to see the explanation or courses for every single indicator, you can find that on the main platform, in the main Patreon platform. So if we haven't done that the last few Fridays, where I basically take a theoretical explanation of what every single indicator basically does and so on. So if you're interested in seeing that, you can just scroll down in the main platform on Patreon and you can find those videos. So here we have the Bollinger Band, we have the stochastic, we have the CCI, RSI, and the MACD. Then we have the main screen of the price action of candlestick in daily chart, and this is the daily chart. And then we have the moving averages. I have currently 7 moving averages here, and that is more than enough at this current stage. So what I was supposed to say is that the MACD is becoming negative. The last time we had a MACD becoming negative was back in November, when we had this drop prior to the US election, and then we had this massive rally. We also had this massive drop here in September, and in both these cases, we didn't bottom out in the market until we hit MACD that was negative 23, and here it was negative 18. So we are at negative 3 at this current stage, so we could have quite a long way to go if we have a similar drop to this. So the major drop last year was here when we had the coronavirus breakout. It bottomed at minus 229. So usually these drops in the MACD are around, the smaller ones are around minus 20, minus 30. We have this one here at minus 71. This was a major drop back in 2019, where US basically the Federal Reserve or the Fed lowered its quantitative easing, and basically there was a massive reaction to that policy. So they basically had to start it again, and now we're starting an even bigger trend. So every time they basically they lower their quantitative easing, we're going to see a massive drop in the market. So yes, we could have some way to go to the downside. We are also seeing these moving averages crossing the 50 moving average, and usually that is a very bearish sign. We can see what happened here when it crossed. That's where we basically bottom out significantly in the market. So what we're going to look at is basically patterns. So the last Friday, we were looking at gold, and gold, we go to the 1 hour chart. So what we were looking at last time was basically channels. So at this point, gold is in a downward channel, and we were basically explaining resistance and support levels in channels, in squares, in triangles, and then we also looked at flag patterns and so on. So today we're just going to look at resistance and support levels when it comes to breakout patterns. So when we're talking about resistance, we can draw it up here. We have a top line and we also have a bottom line. So this price level here we can say is resistance. This price level here is what we call support. So what will happen when we have a market that is moving is that we'll go up towards resistance, get rejected, go back to support, get rejected, and so on and so on. And when we're talking about breakouts, that is basically breaking out of one of these major resistant levels or support levels. So we can see a market, for example, that goes up to a certain point, then it goes back towards a certain point, and then it goes up again. And at one point, it basically breaks this pattern and then goes either to the upside or to the downside. So we have this as resistance and this as support. So when you're talking about a breakout, for example, in this case, you either break below this support level here to the downside, or you break above here to the upside. And that's what you basically call breakouts. And you can have breakouts in different shapes and different shapes. You can have a breakout, for example, in a channel, or in a move like this, an M move or a W move, and so on and so on. So if you look out for what we looked at last time was basically when we had a breakout in a channel. So gold is trending in this downward channel, and at this point we are about to break out of this lower channel here. And that basically means that we can drop significantly lower. And that's the thing with breakouts, that current patterns will be broken and you will have a sudden move either to the upside or to the downside. If we break out here, then we could have a significant move towards roughly say 1600 or probably 1500, because the next major support area, for example, is down here. This is around 1500. So you could see gold all of a sudden drops very rapidly down to 1500 before we find any kind of support in this market. And that's because this channel here gets broken. So we can also we can look at the S&P 500, for example, in a channel where it breaks to, we just had a breakout. So we had this channel here that went up like that. And you basically see that if this price action were to continue following this channel, then we would be up here somewhere. So we would go down towards the support level here, and then we would go up back towards this resistance line. However, we didn't do that. We basically broke out of this channel and then it rapidly went to the downside. So at this point, you can look at certain price levels, historic price levels, to find where it can basically go to. You can, for example, look at the Fibonacci retracement to see where it will find support there. You can look at other price level, for example, here. This is where we bottomed the last time we went out of the channel, and we got really close to that yesterday. If this, for example, support level breaks, then we can go all the way down to these previous highs at 3,580, and then even lower towards this level here. So all of these historic price levels will act as support. So there's quite a lot of support for this to basically break through. But if they break, then you can see a certain drop towards, very rapid drop towards the next price levels. So at this moment, we don't know where it will go, but we can estimate, for example, with the Fibonacci retracement. If you go over the bottom here and up, we have broken the first Fibonacci retracement. The next one is right here at 3,678. And then we have one here at 3,600, and then 3,500. After that, we drop all the way down to this bottom here. So yes, so that is basically the channels. You have upward channels or you have downward channels. The upward channels look like this, parallel line that goes up. Price action goes in between this channel here, and if you have a breakout to the upside, you go above this channel. If you have a breakout to the downside, you go below this channel. Then you have the opposite, that is, you have two parallel lines that basically have a negative slope. Price action will go in between this channel, either break to the upside or break to the downside. And then we looked at, for example, squares. If we have gold again. So here we had a major resistance line. It was basically there. And then we had a major support line that was here. And I was basically monitoring this movement for a very long time, because we had two tops. We had two tops at the bottom, and then you basically have a triangle here. And usually what happens here is that the price action will go into this corner, and then you will have a breakout either to the downside or to the upside. And what we have basically witnessed is that we have broken significantly to the downside. We did have a false breakout here. I thought this was going to be the breakout that went all the way towards 2,100, but that was not the case. We went further into the corner, and then we broke to the downside, and now we're trading at 1,600 and 1,700 give or take. And this is most likely going to drop significantly further if these next price levels if they don't hold, then we'll probably drop all the way down to 1,500. So this was triangles. You can see triangles basically everywhere. There's another one right here that we also tested back in that period, where it was right there, right here. So also here you have a highs, lows, and you just go right into this corner, and then you have a breakout towards the lows here. So this could also have gone upwards. We don't really know. There is a way to trade this. You can basically trade both ways. So you have a stop loss that is above, then you have a stop loss right underneath, and then you make two identical trades. One that is basically going upwards and one that goes downwards. And of course, one will fail and the other one will not. And most likely, you will earn money on the one trade and you will lose money on the other trade. So this is a very risky trade, but it is a possibility there's a possibility that the trade that is good will earn more than the one that basically loses. So that is triangles. And then we have, for example, squares. And we can go and look at the S&P, because there's a very good example of, for example, a square pattern that we have broken out of. So it is right here. So what happens here is that you have a consolidation area, and you have a highs and you have a lows, you have a highs and you have a lows, and then you have a certain breakout of this square. And usually what happens here is that the height of the square is also how far this will go to the upside. So you can measure it in this program by going to the bottom and going to the top. And this is roughly a move of 308 points. So if you take this area here and go to the upside around there, so there's roughly a move of 396. So usually you can go even further, that will be more accurate. So you have a move here of roughly 346, and then you have a move here to roughly 382. So by measuring the height of this constellation, you can basically also measure how far, or estimate, is never 100%, it's an estimate or a probability that this will basically rally roughly the same height of this to the upside before we break out. And that is kind of what we have seen. So we have seen this move here. We got a channel that is roughly the same height as this move here. So give or take 350 points, and here we have 350 points also to the upside. So these constellations, they basically can go also to the upside and also go to the downside. And usually they are in opposite movement. I have two examples of this. One is right over here and one is right over here. And you can look and see what basically happened when we had this price action. This was back in 2019, where we had a pattern here which looks like an M pattern. So we have a move to the upside, then we have a move to the downside, move back again to the upside, and then a move back to the downside. So what basically happens here is that we have a support area down below and we have a resistance area up high. And this is a very similar square pattern that we saw in just a previous example. So this price level here is acting as support. This price level here is acting as resistance. And when we basically break out of this price pattern, we break roughly the height of this price action. So we have, give or take, no, that was wrong, sorry. We have it here. This is a move of roughly 110 points. And here it breaks out and this is a move of roughly 110 points. So this is also a channel to the upside. And people that were following this, they would know that the height of this move, the height of this square is also what was going to be the move to the upside here. When we reached roughly 110 points to the upside, you should expect resistance, and then it went back down to the downside. So as an estimate, it is only an estimate, but it sometimes is very accurate estimate. We can also look at the other one that is right here. This is a W shape, this is an M shape, and if we look at that one, we can see that price action, it went basically down, and then it went up, and then it went down again, and then it went up again around the same level, and then it broke down. So we tested same level 3 times, and then we broke down. So usually when it does not manage to get through a certain price level, when it just gets stuck at a certain price level and can't go continue higher, then usually you see that it will break down significantly. So we have the lows here. It was back then 2,629 and the highs of 2,815. And also here we have a consolidation area of highs and lows, and then we break to the downside. And we kind of oversell at this point. So we have a move here of roughly, this has got around 188 points to the downside, and here we have roughly 274. So we completely oversell in this area here. So yes, it is an estimate, but if you stop selling here at roughly, what did I say? It was 188 points, 184. Here it was roughly around this area right here. That is where it usually would turn around, but it got completely oversold. If you look at the Bollinger Band for this area here, you would see that this is way outside of the Bollinger Band. And usually what happens after that, you have this massive green candlestick to the upside. So yes, so this is basically square patterns that that are visible everywhere. If you look at the lower time frames, you can see all of these patterns, and they work basically in the same pattern all the time. So we also have the other pattern that we're going to look at, that go back here. So channels, squares, get rid of all of this. Yes, and then we have the testing of highs, as I call it. So we can look at the beginning of the pandemic, for example. We were in the S&P 500 at 3,389. Then we fell all the way to the bottom here. This was roughly fell down to 2,200, usually a very round number. And then we basically went up in a channel. And this was, if you write it roughly around that, give or take here, we were basically bouncing off this support line all the way to the corner. And usually when you have these kind of triangles, you have a breakout to the upside. And if you have the opposite triangle, you have a breakout to the downside. So what we saw here, that was basically in the end of August or in the beginning of September, we broke out of this corner to the upside. It went way outside of the Bollinger Band. So remember this, we can look at what it looked like back then. You were basically right there. So you can draw it. So we went right there. We went outside of the Bollinger Band, and then it went completely south for the S&P 500. So this is also a pattern that is very normal to see. You can basically have it in the opposite direction, that we have this, and then it breaks down. So we have the bullish ones that look like this. And then it breaks to the upside, and we can have the other ones that look like similar to this. And it breaks to the downside. So you gradually go into the corner, breaks, gradually goes higher, and then it has a certain takeoff to the upside or takeout to the downside. So this is mostly what happened after the rally of the corona, after the drop here in the coronavirus. We basically had a massive move to the upside. It completely overshot both in the RSI and in the Bollinger Band, and then we had a massive drop into the box here, and then we continue back into with the channel. So this was also a channel that we broke out. We can basically write it up like similar to this. We went all the way to the top, and then it broke significantly down below this channel, very similar to what we basically are witnessing now with this breakout of this channel. Yes, and then we basically looked also at flag patterns. So we can go back and look at, for example, gold. You have it right here. So you can have bullish flag patterns and you can have bearish flag patterns. And the reason why we call it flag patterns is because you have technically a pole, and then you have price action that gradually goes down like this. So this is similar to a bullish flag pattern, and what usually happens here is that you take off to the upside. So price action will increase to a certain point and then gradually go to the downside, and when we hit a certain point down here, it will basically take off to the next point. The opposite flag patterns, they are in the opposite direction. So we have a certain drop, then you have a gradual increase in the price action, and then you come to a certain point where it basically drops even further. So this is a bullish one, and this is a negative one. And we have example of these flag patterns here. So we can go, for example, over here. There it is. So here is an example of a bullish flag pattern. So if you draw this up, it basically goes from the bottom here to the highs, and then it gradually goes to the downside. We see like this, and also like that, and then it just bounces to the upside, all the way up here. So the length of this move usually is similar to the length of that move. So we have increase, gradual grind, and then a bounce to the upside. So this is what we basically see as a bullish flag patterns. And you also can see this everywhere. If you look at the lower time frames, you'll see these moves all the time. You increase, gradual grind to the downside, and then you increase again. So we can look at, for example, a bearish one, where we have one right here. So we have a rise to the upside, breakdown, and then you have a small grind to the upside. It looks similar to this. And then you have a move, an additional move to the downside. So this is a fairly big move to the downside from this pattern. But same here. Pole is basically the flag is an opposite upside down, so it drops down, gradually goes up, and then it drops down again. So this is a move similar. This is basically an example of a bearish flag pattern. So just got a text, and neon basically fell off a cliff. It's down -8%, so not really good. So if you basically take all of these certain patterns and also breakouts. So first of all, we can take the channels. They look like this. You have a positive slope in a channel where you can break out to the upside, or you can break to the downside. And what we're witnessing, for example, in the S&P 500 at the moment and most of the indices is that we have been in a channel and then we are breaking down. And now we're trying to find support before we again go trending to the upside, or we'll trend to the downside for a significant yes. So we have the channel to the downside, negative slope, and then we can increase to the, we can break to the upside, or we break to the downside. So positive slope, negative slope, you can break to the upside and also break to the downside. Then we have, for example, the square pattern, not the squares, triangles, where we have a certain increase, go gradually into the corner, and then we can break to the upside, or we basically break to the downside. So one is right here. We could also have another, we have also one, a bigger one right there, and so on. So, and then we have the flag patterns that we have increase to the upside, gradual grind to the downside, and then we rally to the upside. So it looks basically like a flag. So it goes up and then it breaks to the upside. Then we have the opposite, is the bearish ones. You break to the downside, gradual increase, and then you have a certain drop to the downside. So decrease, rally, and then decrease again. And that you basically see everywhere. You have a certain one here where you go down. You have a certain one here, drop down, go up, and then drop down again, and so on. So movements to the upside will include flag patterns, bullish ones. Movements to the downside will include bearish ones, basically all of the time. And then you have, for example, the testing of certain resistance levels and support levels, where you go up and you go down, and then you go up again, and you basically test the same support and resistance areas over and over again until you technically break out. So sometimes it looks like an M, sometimes it looks like a W, and you can break to the downside here. Or for example, if you came over here, that you got, and you basically broke, then you broke to the upside here. So you're basically within a certain, you're trading sideways, you're within a resistance level and a support level, and you break to the downside or towards the upside. And then you have these, I'll try it here, and you have these squares. Bullish ones, where it breaks above here. And then you have the bearish ones, which is the opposite. Where it breaks to the downside. So all of these moves you basically see constantly within price action. You don't have to have anything else on your screen. You can just look at these patterns and then just train. And it's, for me as an economist and a mathematician, this is basically what I like doing. Just look at patterns and see where this basically goes. Because historical price action will repeat itself. So if you look at, for example, the S&P 500, we can go way back and look at how the S&P 500 has been behaving historically. And you will find all of these patterns reoccurring again and again. For example, there is a price level here, which was at around 1527, where we hit two certain very, very important levels. This was the top of what we call the dot-com bubble. This is basically the top of what we call the big Great Recession. So it's really interesting to see that this top here, that basically was the top of the dot-com bubble and the start of this massive trend to this channel to the downside, where market fell, I think it was roughly 55%. Can take a look at that. No, that was not the, get rid of this. So this is a move of roughly 50% to the downside. So only a few years later, we bottomed here at 2002, and then we had a channel to the upside. We basically had a breakout here. Then we had a channel to the, get rid of this, sorry. Then we basically broke out of this negative channel to the upside, and then we again hit the exact same price level, or not price level, but points at 1554, and then broke out of this channel to the downside. So historically, this is very, very interesting. So we hit exactly the same points that caused two massive recessions in the beginning of 2000 and in 2017, where we basically 2007, 2008, where we basically hit the top here and then started this massive move to the downside. We also see here a flag pattern, a bearish flag pattern. If we get the channel right here, it basically moves very far to the downside, and then we have a gradual increase. And what we see after that is that we basically fall off, that we have a massive fall down here. Then we have another flag pattern, bearish flag pattern to the downside. And after that, we just fall off a cliff. So we have a massive fall here. So breakdown, gradual increase, breakdown, gradual increase, and then we have additional flag pattern down here. And then we yet again break down until we hit rock bottom at this point. So this market bottom at 690. I think it was a drop of roughly 55 points. I haven't done it here. After that, we have a massive move, biggest rally in the S&P 500's history, and that move hasn't stopped yet. Even though we have this major move to the downside when we have a sell-off when the coronavirus starts, we haven't basically seen moves like this that last for 2 years. We are going to see it at some point, but we have not seen it. All of these moves to the downside are minor moves. Even this move is only a move of roughly 35% to the downside. These moves here are 50 to 55 points to the downside. So this is something that you see probably once in your lifetime, that you see hit in the daily or in the weekly chart the same point that drop and create a massive recession. So at the moment we are still in uptrend. We can basically put a line right here and also a line around this point, and there have been certain points where we have basically broken out. We can do like this. So we have rallied to the upside, and what we could witness now is basically a breakdown all the way down to this point. Sounds crazy? It is possible. Also here we had patterns that showed similar moves, which also were met, where we broke down, up, broke down, and in the future we can see a market that goes all the way down to this level here, around 2,000 and so on, before going higher. And when considering how overpriced most stocks are, it would not be strange if we saw something similar to that. If we have recessions similar to these, then we can actually have a move all the way down to these very low levels. Get rid of that. This, and we can basically see we have gone outside of this. If we manage to break inside, then we could head all the way down to the bottom, and that basically means that we'll have a major breakdown. So in the stock market for the foreseeable future, but hopefully that will not happen. Hopefully we'll just bounce off this line and then just continue to the upside. So, any questions? There is a massive delay in this, and I'll try to fix it, but do you have any questions? We can start with a Q&A now. You can write on the chat in YouTube, or just add it on Patreon. I'll see both of them. Yes. Yes, this is not the futures, but I can do the same thing for NASDAQ here. So this is the daily for the NASDAQ. So this is just pure price action. We can probably start just predicting where we are technically going. It's a very similar analysis for the NASDAQ as it is for the other indices. They tend to move in the same direction. For example, we have this consolidation move here. We went from tested this 3 times, 1, 2, and 3, and then we broke out. And then this move here, which is roughly 1,500 points, give or take. That is also the move that we saw to the upside, or roughly, this was 2,000 points. We can go to the upside here. That fits a little bit better. That's around 1,500 points. So we basically hit our target compared to what basically this was saying. So we went into a channel, and we also had the bottom here, and then we just broke out of this channel. Now it is basically falling apart, and we can look at historical resistance levels. That is one is right here, is basically where we've had this resistance, which should act as support. We are going to test it now. We're right at the edge of that. That's these previous highs here, or the right there. We're right at it. That's where we hit it yesterday. If that breaks, then this could drop all the way down to the very bottom here. So 10,781, that is where the bottom of this area. That is a very, very big drop, and we'll see rally to the upside before we ever get to that point. But that is technically possible. We can also look at another point that is all the way down here. That is the previous highs of the when the coronavirus started. So we're testing this one here. We can drop to that one, and we can drop to this one. If we get rid of this, we can also look at the Fibonacci retracements, which is right here, all the way to the top. And we can see that we are right at the 50 Fibonacci retracement. So if this one breaks, then we are certainly going to go, not certainly, but very likely going to go towards the 61.8, and that is, give or take, around here, 11,900. So 12,000 will be usually people look at the very rounded numbers and then they buy into that. If this breaks, then it's mostly often that when the 61.8 breaks, then you go all the way down to 100, which is down here at 10,718. So if we, for example, say that this is as far as the market will basically go, if we say that 12,000 is far as the market will go, we can get rid of this and that. So we can do a projection here. If we say that this is basically the as low as we will go, then we can take this to the very upside, and we can take this to the downside here, and then we can project that we will rally up towards around 12,770, towards 13,248, and then we run into major resistance around this area at 13,600. If this breaks, then we'll go all the way up to 14,000. So we are in a downtrend, and as I said in the beginning, you can look at the MACD historically, how far the MACD drops. So last time we had these drops over here. We can look at them right there. They dropped, give or take, minus 64 points. Here it was minus 100, and around the big drop here was a minus 510. So we are not even close to these drops, and we are, not close. I'm sorry, now I'm getting the wrong indicator. We are far below these drops. I'm supposed to say minus 170 at this point. We're testing the 150 at this point, and yes, I would just look at the Fibonacci retracement. That is probably the most accurate that we are going to have. I would expect the 150 to offer quite a lot of support. We can also see that the RSI is now very low for the NASDAQ. It has been selling off quite significantly, and the big losers you can see the big changes here. Is the upside. The big losers are, for example, Tesla is still dropping. We're finding it's testing the 150 at this point. Then we have this is PayPal also dropping significantly. Basically, all of the stocks that have been rallying substantially in the lockdown, they are the stocks that are getting really hit. Yes, any other questions? On the positive side, it is basically when you have these big drops, it is possible to have to buy these stocks in a cheap and just hold them. So if Tesla, for example, were to drop 50% or something like that, it is going to be a company that is going to increase again in a lot. So you can buy these stocks on a cheap, and you just hold them for a very long time. That is probably the safest bet there is. You could also say that it is looking like a flag pattern, a bearish flag pattern. It's not a few days, but it kind of looks like that. And if that is the case, we'll only see it when we will see this rise again. This is a drop of roughly 1,000 points. Then you should see this drop at least 1,000 points as well. And that is roughly around there. That is 12,000. So there are many methods that are basically pointing to 12,000 at this point, as that is going to be where this market is going. Yes. Nobody has any questions, then I'll probably leave it to it. I don't know if I'm going to trade anything today. I'm just going to watch the market, how far it basically drops, and then focus on Monday. So thank you very much and good luck.